Hey, Simpler, it's Chandler. Thank you guys for tuning in. In this video, I wanted to actually share one of my favorite indicators. And personally, it's been one of the most reliable and powerful indicators over the course of my trading career. So I'm really excited to introduce it, break it down a little bit how I use it, and hopefully you guys can add this to your game. And that indicator that I'm going to cover today is called the Ichimoku Cloud. If you're used to my teachings or you've kept up with me for a little bit, you've probably seen this cloud before. And maybe you've wondered, well, what the heck is it? In this video, I'm going to describe it and teach you guys how to add this one to your arsenal. So again, this indicator is called the Ichimoku Cloud, Ichimoku. This is available on most platforms that have indicators, Thinkorswim, TradingView, TradeStation, all of those platforms will have this indicator. However, when you guys do type it in and you put it on your charts, it's going to look a little bit different than what I just showed you. And the reason for that is Ichimoku in itself is actually an entire system. But what I figured out over my years of trading is that I personally only need the cloud component and I only use the cloud. So what you guys can do is go in here real quick and edit your study. So you can do that by going up here, clicking the gear icon, and you honestly just want to hide. And what I mean by hide is uncheck the plot. Everything besides span A, which you want checked on, and span B, which you want checked on. So you can hide every other component. You don't need to tweak the periods. You can leave all of that the same. The only thing you can do is adjust the colors if you'd like. I changed the cloud to gray. And if you do all that, it's going to look like this. So that's the technicals real quick. Let's talk about the real juice and meat here and talk about how and why the cloud is so wonderful. So the first thing that the cloud does in its usage is it gives you a sense of trend. And that gives you a sense of trend on either a bigger picture chart, like a daily that we're looking, or you can use it on an intraday chart to get a sense if something is, in a bearish trend for 5-minute intervals, or even a 1-minute interval if you want to get a sense of trend. But that truly is the first purpose that the cloud serves, is it allows you with a quick glance to get a sense of trend. Again, either big picture or smaller picture. And the reason that we find this out and we can read this is very simply here. If price is above this physical cloud, so price is above the cloud, it's bullish. If price is below the cloud, it is bearish. And again, not to repeat myself, but this does depend the time frame. So obviously a bearish 1-minute trend isn't too important. It is for the 1-minute time frame, but on a bigger picture, these clouds are going to be most powerful on daily charts, weekly charts, etc., to really help you get a sense of the actual trend of the stock or the index. So again, we're above, price action is above cloud, we're bullish. We're below it, we are bearish. It's as simple as that. So that's the first way that the cloud works, guys, and I'm going to really dig deeper onto this. The second way that the cloud works is it gives you a current spot of support and resistance, and it also gives you a future projection of where support and resistance should remain. And what I mean by that, guys, is you can see here, if we just look as I make this video, we have levels of the cloud that are forming further away from price. They're actually building about 37 days away. They're building out support and resistance. So this is what I mean by not only does it give you current support and resistance, but it gives you a projection of support and resistance. So the way that we're going to use this, guys, is if we take a look at this year for the overall market, whenever we start to near this daily cloud, we know this level is here. And we know that if we shift below it, it's going to be a bear trend. But this is exactly where most of the time price action will be picked up to defend that trend. So every time this year, we've had an amazing, amazing trend for the overall market. Whenever we sell off, we hit that cloud and we hold in support and we get right back to work. We come back down, we hold that cloud and boom, we rip, we rip, we rip. So again, guys, what I mean is when we're here, we know the cloud is here. So that's our future projection. And then when we get there, that's our, current support and resistance. So we can see where it is. So when we get there, we can utilize it. Nothing sneaks up on you. Everything is already in front of you. So if we look recently, we got near the cloud again and we supported it. About 2 weeks ago, I was waiting for the market to go and kiss the cloud because, again, we have the future level and we have what the current level will be. So when we were here, I was waiting to see, do we roll over and hit the cloud? If we hit the cloud and hold, we're going to pop because we've done that all year, telling us it's a very strong bull trend, where if we did break below that cloud, that would be the first bearish trend for the entire year. And we would see price break through it and then truly start to, roll over and panic. However, the cloud's so great because it holds, it holds, it holds, it holds, it holds. So it tells us not only the trend, but it also is kind of revealing exactly where it needs to hold. And it has not let me down this year. So I hope that makes sense, guys. Let me show you a few other examples to really just drive home this lesson. And that's on ROKU equity. Or if you take a look at ROKU equity, just going back into 2020, had a really beautiful trend, which is kind of basing here. But what? It was above the daily cloud. So it continues to trend and continues to trend and continues to trend. Keep in mind, guys, I showed you a bullish example on the overall market. When we shift below the cloud, that's when it becomes bearish. So here's our first example to kind of help break this down, right? Everything's fine and dandy, everything's fine and dandy until we break inside of the cloud. The first step of breaking inside of the cloud will be headed to the bottom of the cloud. ROKU heads to the bottom, gets stuck inside of it, and then finally breaks on the other side of it. So here we are officially on the other side of cloud and in bearish territory. So now we can expect ROKU to continue lower until it breaks on the other side of that cloud. So you can see, guys, it flushes once it breaks it, runs all the way back up to it, and gets rejected, and then falls again for a few days. Creeps right back up near it, gets rejected right at it. We knew this level would be here. And then boom, gets rejected and flushes even more. Works its way up, gets rejected, can't break through until finally, one day, ROKU breaks through and goes on a monster run. So right there is called the cloud shift, the cloud crossover, where we're going from big picture bearish to big picture bullish. So not only do you get that amazing move when we start the journey of shorting it, you get the retest to short it, you get the retest to short it, and then the day it shifts on the other side, it just explodes. And that, my friends, is the power of the daily cloud. Let me show you guys another example. So what I've noticed, and again, sharing a few gems here over my years of using the cloud, let me just get a clear drawing set here. One thing that I've noticed on the cloud is anytime that a stock is very bullish or gaps up extreme, it most of the time will actually wait to get to the cloud before it takes any type of action. So I really like to combine daily squeezes with the daily cloud. So you can see here, guys, Google, last year gapped up really strong on earnings, and we knew the cloud, was way over here. So honestly, was kind of waiting for it to get there. Google gaps up, Google goes sideways for weeks, finally gets to the cloud, and then starts its beautiful run. Daily squeeze again, wait, get to the cloud, explode. So this is a gauge, guys, where again, you have that forward projection, or if I put on the squeeze and the cloud, squeeze, starts to support and explode, squeeze, gets to that cloud, and it becomes the launch pad. So remember, very bullish that it's above it, but if it goes sideways, wait until that inflection point where you'll get that pop. Much like the overall market, we know where the levels are. No need to buy the dip until you get to that cloud, right? Again, and again. So no reason to buy this dip, big picture. But if for some reason the market did roll back down to here, I'm buying that dip because it works again and again and again and again and again. If this is the first time that it breaks below it, we're going to see a really good move because that'll be our first true trend change for the year on the index. Hope that makes sense, guys. Let me show you a few more examples of the cloud. So that's the daily cloud, guys, right? We talked about ES just holding it. We talked about ROKU, who broke underneath it, tried to break out, tried to break out, tried to break out, boom. Now the bulls take over. And then we saw something like a Google that's just very strong, gets to cloud, then explodes. Sideways, 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 gets to cloud, then explodes. Really great usages here, guys, over and over and over. And now I want to show you another big benefit of the cloud in that it actually works as a sequence. And what I mean by that, guys, is you can combine intraday timeframes to get a sense of what the stock could do next or the index could do next. And what I mean by that, guys, is the following. So you can use these clouds together in a sequence. So let's just break this down. Market was selling off here. Market was selling off. And then it hit that daily cloud. Well, I want to show you guys what happened underneath the surface when we start to look at other clouds. And I really like 4-hour, 2-hour, and 1-hour clouds. So let's hop in here and take a look. So if we take a look, guys, at the market, right? We were underneath most clouds as we started to near the daily cloud. That's just kind of how it works. So it's above the 2-hour, it's above everything. But it's going to break below these smaller time frames first and then lead you down to those bigger time frames. So again, you can kind of use multiple time frames here to get a sense of what's happening. So ES is trending until it breaks below the 2-hour cloud. And then it bleeds and it bleeds until it reaches that daily cloud where I had circled and we bounce back. Well, when we bounce back, guys, we bounced back above the 2-hour cloud and we continued our beautiful journey here. We retest it, we hold, we retest it, we hold until we break through the cloud. Now, what's important here, guys, to understand is when we break through the cloud, this is what I mean by a sequence, is you can go and check, well, if it breaks here, the 2-hour cloud, it's going to start to head to another bigger picture cloud, which you can utilize the 4-hour. So you guys can see here, right? When it broke that 2-hour, it also started to break the 4-hour cloud, and then it hit the daily cloud. Hope you guys are staying with me here. We worked our way higher. We shifted through all the clouds, and we're bearish. We're above 1-hour, 2-hour, 4-hour, daily cloud. Everything's screaming bearish until, screaming bullish until we start to break that 2-hour cloud. We start to get tired. But where do we hold? Right? The 4-hour cloud. So this is what I mean, guys, by a sequence where it can break those smaller time frame clouds, like an hourly cloud. It finally dumped through it right here, but it hit that 2-hour and 4-hour cloud. So the bigger picture trend. And now we're back to all-time high and off to the races. So this is a way of combining, multiple time frames to get a sense where if we're headed to the daily cloud, well, that means, guys, we're below the hourly cloud. So we break below it, we reject it, we bleed, bleed, bleed until we reach that bigger picture cloud right here. And then we hold it. We rally, we rally, we rally. We start to break little intraday clouds until we hit the next biggest one, which is the 4-hour. And we continue our journey higher. So I hope that helps, guys, reveal a little bit of how to use the sequence of the cloud. We're really focused on a few time frames, so like an hourly, 1-hour, 2-hour, 4-hour, and then that daily to really get a sense of the sequence and the process that a stock will have to take given its clouds. And the last thing I want to introduce here, guys, is using intraday clouds, such as a 1 minute. So I want to give you an example here on NVDA. So if we take a look at NVIDIA, guys, same things apply where if price is under the cloud, it's bearish. That could be bearish on a monthly chart or that could be bearish on a 1-minute chart, meaning the trend's not going to last that long, but it can be useful depending what type of trader you are. If you're a day trader like myself, I love the cloud on a 1-minute time frame because you can see, guys, we start the morning below it before we even open. That's a bearish trend. I'm already having a little bearish sentiment. It opens, it pops, and it fails at the cloud. It can't get on the other side of it. And it completely fails. Pops a little bit, gets nowhere near the cloud, and fails. Pops up near the cloud, fails, fails, until it breaks out of it. So what I call this, guys, is the cloud crossover. So, again, we open, we reject, we bleed. We pop, we bleed, we pop, we bleed. We pop, we bleed. We're starting to turn around a bit here, starting to put in higher lows. We break through the cloud finally, but we can't break out of it. but then we hold it and support it. And then right here, we break out of it. And that's what gives you your multi-point move to take advantage of if you're an intraday trader. So again, guys, very simply, underneath it, think bearish, think to short the pops until it breaks through it. And then you're looking to go long. You can see, guys, it comes back down to it, gets stuck in it, and kind of gets messy. So depending the stock and the price action, it'll be very apparent and evident what the cloud is telling you. So don't trade messy clouds because some stocks just have messy price action. And therefore, the cloud itself is going to be messy. But if you have clean price action and a clean picture, you can have some really beautiful trades here, right through that cloud, riding it back up towards high of day. So I hope this video helps, guys. This was our introduction and, kind of first preface together on the cloud. I do spend most of my time on the newsletter breaking down the cloud for a bunch of setups. So we really want to pay attention to these clouds, and hopefully this video makes more sense. Because, quick example here, we saw the 4-hour cloud sequence. NVIDIA, as I make this video, is right at that cloud. Gap down, is holding it nicely, could easily start to rally off of this cloud, or could start to break through this cloud. And as you guys just learned, are probably going to start to head back towards that big old daily cloud. But just an example there to kind of summarize our video. So again, guys, when price is above cloud, we're very bullish. If we retest it and hold it, it's great. It offers support currently and in the future. Above it, bullish. Below it, bearish. Watch support, watch future support, and make good use of the cloud, guys. I really hope you enjoyed this video. If you have any questions, feel free to reach out to me. But go have fun, go enjoy, and make good use. Thanks, guys.